If you ever climbed a mountain early in the morning, you know that it's like to stand above the fog. From the top, you can see everything clearly, the valleys, the roads, and the path ahead. But when you're down in the fog, everything looks confusing. That's exactly what the Ichimoku Cloud does in trading. It clears the fog so you can see the full picture of the market. The Ichimoku Cloud, or Ichimoku Kinkohayo, was created by a Japanese journalist back in the 1930s. The phrase Ichimoku Kinkohayo means one glance equilibrium chart, and that's exactly its goal: to let traders see trend direction, momentum, and support or resistance in all one view. At first glance, the Ichimoku might look complicated. There are lines, colors, and a cloud that change shape. But once you understand what each part does, it becomes one of the most powerful all-in-one trading systems. The Ichimoku system is made of 5 key lines, each with a specific purpose. Let's break them down one by one in simple terms. First, the Tenkan-sen, also known as the conversion line. It's calculated at the average of the highest high and lowest low over the last 9 periods. You can think of it as the short-term trend. It reacts quickly to price movement, just like a speedometer on a car. Then we have the Kijun-sen, or the baseline. It's like the average of the highest high and lowest low over the last 26 periods. It moves slower and acts like an stability line, showing the medium-term trend. When price is above the Kijun-sen, it suggests bullish control. When it's below, bearish control. The next two lines form the famous Kumo, or cloud, the heart of the Ichimoku system. The first line of the cloud is called Chikou Span A. Is the average of the Tenkan-sen and the Kijun-sen, projected 26 periods into the future. The second line is the Chikou Span B, the average of the highest high and lowest low from the past 52 periods, also projected 26 periods forward. The space between these two lines is the cloud, and this is where the magic happens. The cloud shows future support and resistance. When price is above the cloud, the market is bullish. When price is below the cloud, the market is bearish. When price is inside the cloud, the market is in indecision or transition. Finally, the Chikou Span, or lagging line, is today's closing price plotted 26 periods back. It helps confirm momentum. If it's above price, it supports a bullish trend. If it's below, bearish. Now, let's put all of this together. When the Tenkan-sen crosses above the Kijun-sen, it's a bullish signal, showing short-term momentum aligning with medium-term strength. When it crosses below, it's bearish. But here is the key. The strength of that signal depends on where it happens relative to the cloud. A bullish cross above the cloud is the strongest signal. Momentum and trend both point up. A bullish cross below the cloud is weaker. It's going against the main trend. The same logic applies to bearish crosses. In simple terms, price above the cloud equals uptrend. Price below the cloud equals downtrend. Price inside the cloud equals no clear trend. The cloud itself acts like a dynamic support and resistance zone. Price often bounces off the edges of the Kumo before continuing in the same direction. Now, let's visualize this with a story. Imagine the cloud as the weather around a mountain. When the mountain, the price, is above the clouds, the sky is clear and the view is bullish. When it's below the clouds, the weather turns stormy, bearish conditions. But when it's inside the clouds, visibility is poor. That's when professional traders wait, because the market hasn't chosen a direction yet. The Ichimoku also projects information into the future. That's what makes it so unique. While most indicators lag, the cloud is shifted forward. It gives traders a glimpse of what upcoming support or resistance levels might look like, helping them prepare for possible reactions ahead of time. Let's see how this might look in practice. Suppose Euro USD is trending above the cloud, Tenkan-sen is above Kijun-sen, and Chikou Span is also above price. That's a fully confirmed bullish trend. If price traces towards the cloud but it doesn't break below it, traders see that as a potential buy the dip opportunity. Now imagine the opposite. Price breaks below the cloud, the Tenkan crosses under the Kijun, and the Chikou Span is under price. That's a confirmed bearish setup, signaling that sellers are in control. Professional traders often use Ichimoku or higher time frames like 4 hours or daily charts to get the bigger picture. Then they drop to lower time frames to refine their entries. The cloud acts as their map, guiding them through each market conditions. Now, here is a tip many beginners overlook. When the cloud ahead is thick, it means strong support or resistance. It will take a lot of momentum to break through. When the cloud ahead is thin, it means that zone is weak and a breakout might happen soon. You can also spot Kumo twist moment when Tenkan Span A crosses Tenkan Span B. When the cloud changes color, it signals that future momentum might be shifting. It's not an immediate signal, but it's a powerful early warning. Let's recap the most important things to remember. The Ichimoku Cloud gives you a complete view of trend, momentum, and support and resistance in one glance. Price above the cloud equals bullish, below the cloud equals bearish, inside the cloud equals neutral. The Tenkan-Jinkun cross gives entry signals. The Chikou Span confirms direction. The cloud's thickness shows the strength of future zones. In short, Ichimoku isn't just an indicator, it's a full trading system. It shows the past, present, and future all at once, giving traders a kind of market weather forecast. So remember, when you use the Ichimoku, don't just look at one signal, look at the whole picture. The market might be foggy at times, but once you learn to read the cloud, you will see the path ahead with much more clarity.